Hello, ladies and gentlemen. Welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is October 22nd, 2020. I hope you're well and safe and healthy. We are going to focus on gold and the gold mining sector in this update. We have been spending a lot of time looking at the metals themselves. We will have a brief update on the gold price this week. And I do want to spend some extra time focusing on the value that we see here in various subcomponents of the gold mining sector, because if we are right on this move in the gold price, then there are life-altering gains to come over the next couple of years in the gold mining sector. On that note, I want to make a special announcement right now, which is that this time next week, we will be having an interview, a special interview with a mining company CEO, a gold mining company CEO. And, I've done some interviews in the past with other analysts on this channel, but this time I'm excited to do an interview with someone who's actually managing a fairly large gold deposit. And I'm not going to give away the name ahead of time. But that's coming this time next week. Should be pretty exciting. And just so you know, this is a company that we are investing in here at iGold, and also many of our clients are investing in this company. So if you tune in next week, this will give you a chance to learn about one of the companies that we are investing in and why I think it is going to succeed over the years ahead. Let's get into this week's update. Make sure to hit the big red subscribe button if you have not done so already, so that you'll get notified. Hit the bell icon so you'll see when the next video is uploaded next week. Let's get into it. So looking at the gold price for the last 3 days, pay attention to this data point right here. This little reversal as gold was trying to clear 1930, right? And then closing right below 1925 for the day today. This 1925 level was key. We were focusing on this in the premium update last weekend, and I want to show you why. So pay attention to this. Let's zoom out. Now, here is gold over the last 6 months, and this is the critical pattern that is shaping up right now in this market. It's going to impact silver. It's going to impact the miners. What are we talking about? We're talking about this shape forming right here, which is a wedge pattern. A wedge pattern is typically a bottoming pattern. Remember this. So we are getting a bottoming attempt here in the low 1900s to mid 1800s. But notice, remember that data point we were just looking at that I asked you to make note of? That was right there. So not random at all. I mean, look at these hits on this line here. Do you think I'm the only one who draws lines like this to mark where the sellers are coming into this market? And sure enough, they showed up once again at this declining trend of sellers here. Now, just to remind you on what this pattern is, if you've been following this type of work for the last several years here in this channel, you already know what I'm about to say. But if you are new to this kind of work, please take a moment and listen to this. A wedge, such as we're seeing here, is a bottoming pattern in which the highs are coming down, but the lows are coming down also, just not as an aggressive as a slope as the highs. And so we can see here, when we're talking about a less steep slope on the lows here, this pattern argues that eventually the buyers are going to overcome the sellers. That is the message of a wedge pattern. And so here we are right in here. We're about, we're getting into, let's say, about 3/5 of the way through to the apex of this pattern here. And really, we only have one question as far as the preponderance of the evidence shows us about what's happening in the world with the election coming up. Looks like there's going to be a contested election here in the United States. What else is going on? Stimulus packages that they're trying to ram through Congress right now. Multi-trillion-dollar stimulus packages are going to be printing money until they're blue in the face and, dropping it on everyone. So gold is responding to this, and we are seeing this pattern nearing its apex here, its terminal stages, but there's still a little room here for this pattern to continue on. Now, I will tell you this, from having studied hundreds of these patterns over decades of my career in studying this, there is no single way to determine whether or not this pattern is going to break upward now, immediately. Here we are in the middle regions of the pattern, or if there is going to be one final nominal new low below the low here from September and below the low from August before this pattern resolves higher, let's say 3 to 4 weeks from now, let's say in the aftermath of the election. These patterns like to give a lot of these fake outs. We just saw one today. It wouldn't surprise me to see a bit more weakness here in the gold market coming into mid-November. Then again, sometimes, because this looks so obvious to me, sometimes, and think about all the people who are waiting here for gold to make one more low. A lot of people are saying, wait till after the election to buy gold. What if this is going to be the time where gold doesn't actually give us that one more opportunity and instead breaks higher, let's say a week before the election? So markets try to fool the majority most of the time and take as few people as possible along for the ride. This is the message of a wedge. This is getting ready to break higher. It's just a question of timing. And so our strategy here continues to be mostly invested at this point and perhaps save a little bit of your powder in case there's one more drop here to come over the next 2 to 4 weeks. We are in that kind of window. And so what I want to do now, as we zoom out even further, we were just looking at this correction right here where my mouse is from the recent all-time high in the gold price. What I want to do now is zoom out and talk to you about valuation, because I genuinely believe, and this is what I'm aligning my personal money in, this is what our firm's capital is invested in, and this is what our private clients are investing in right now, and here is the research to back that up. There are going to be life-altering gains made during this next leg in the market. Here is why. Look at the relative valuation. Gold on the top, functionally speaking, equivalent to the 2011 high, right? It made a new nominal high, has come back, is retesting that zone, and here we are, functionally speaking, at the 2011 high, just above $1,920 per ounce. Now, could one buy gold here, and would it be, a good purchase, let's say a few years from now? Yes, I think so. I think you will make money if you buy gold even now, close to the former all-time high. That said, there is much better value in this sector right now. And as an example of that, on the bottom, we are looking at the GDX senior gold mining companies, which dig this very metal out of the ground. It's just that their valuations are still 55% below that former all-time high. So if one is bullish on gold and saying, well, let's say gold goes to $3,000 an ounce over the next couple of years, what do you think is going to happen, which is a 50% gain for gold? What's going to happen to the value of these gold miners? These things need to rise 55% just to get back to where they should be based on the 2011 high, let alone if gold goes to 3,000 or 5,000 or 10,000, these things are going to be hundreds of percent higher than where they are right now. But today, what we're talking about is today. With no increase in the gold price today, these miners should be 55% higher than where they are today. So the value is still in the gold miners at this juncture. 55%, that's nice. Let's look at another example, another subcomponent within the gold mining sector. We are now looking at the GDXJ, the Junior Gold Miners ETF, which relatively speaking, to get back to that same 2011 peak area here, would need to rise 150%, more than a doubling, just to get back to where they should be right now, where they should be at this moment. Do I think this is going to happen? Yes, I do. I do think these companies are going to rise 150% and then some over the years ahead. And that's with no increase in the price of gold needed. So if someone is coming to me and saying, where is the relative value in this sector right now? We just talked about the senior gold miners. And look, I'm saying the junior gold miners are even more undervalued, and they will play catch up. What we're seeing thus far is fairly stereotypical type of price behavior where gold moves first. The senior gold miners are the closest to where they should be valued, and the junior gold miners are lagging, and they eventually play catch up. Now, let us look at one more example. We just looked at the junior gold miners. This is a proxy for the development stage gold miners. What am I talking about? What is the difference between development stage and junior? When we're talking about junior gold miners, we're typically talking about producing gold miners, or gold miners that are producing in the range of 100,000 ounces of gold per year, somewhere in that range, 100 to 200,000, sometimes a little bit less than 100,000, but in that range, or the equivalent when we're converting silver to gold, in that range of 100 to 200,000. They are already producing. Development means these are companies that are sitting on proven deposits of gold, let's say, yet they are not yet producing that gold. Let's say it's going to take them 2 or 3 years still to build the mine. These are called development stage companies. Now, there is no perfect ETF. There is no ETF that tracks the smallest of the development stage companies. And so for that reason, we are using the CDNX. This is the Toronto Venture Exchange Composite Index, which is made up of 60% mining companies up there in Toronto. So much of Canada's economy is based on the resource sector. The composite index here of the venture, this is almost equivalent to the NASDAQ here in the United States. It's the smallest companies that trade on the Toronto exchanges. They trade on this venture exchange, and 60% of them, as I just said, are in the metals and mining industry, the resource industry. So this CDNX is a good proxy for the smallest components, the smallest cohorts of the development stage miners. And this index, to get back to its 2011 peak, would need to rise by 250%. We just looked at the GDXJ, which is an ETF, and said that only needs to rise by 150%. For my money, I am looking for the best reward potential with the most modest amount of risk that I can take. And what I'm saying is the greatest reward potential, given that everything could fall. Any of these companies absolutely could go lower. But what companies have that major revaluation potential? It is the development stage miners. It is the miners that are not already producing, but they are sitting on known deposits or known mountains of gold. Hint, hint. And so the problem is that there is no ETF which tracks these companies. You have to buy the individual companies. If you want the companies that are going to rise 1,000% over the next 2 to 5 years, you have to buy the individual companies. The smallest of the companies, the exploration and development side, there is no ETF that tracks them. And this is a good segue into why next week we're going to be having this interview with a gold mining company that I am investing in personally, and that many of our clients are already investing in. And I want to bring you that information so that you can make your own decisions and you can see some of the value propositions that exist here, such as what we've just talked about, that some of these companies still have 250%, and I'll tell you what, some of these companies still have 1,000% to go to get back to their 2011 peaks, and this is going to happen. This is going to happen over the next few years. This is not Fantasyland talk. This is what the data shows, where these companies need to be revalued based on the current gold price. Remember that. We looked at the 2011 peak in gold and the 2011 peak in a lot of these funds and a lot of these companies. We're not talking about gold needing to go to 3,000. Do I think it's going to? Yes, but we don't even need that for these companies to go up hundreds of percent. All we need is for the market to regain a sense of rationality. It will do that in time. You have to decide whether or not you want to chase the market once it's already revaluing higher, or whether you want to get positioned before the market starts to move. If you do not want to wait for our interview next week with this gold mining company, you can subscribe to our premium research service, which is called Precious Metals Intelligence, and it includes the exact gold miners that we are investing in here. We just bought another one week ago, and we are waiting to fill our second half of that position, and that goes out in flash updates to subscribers. And I just gave you the reasons for why we are doing that. You know, it's not a big mystery. The relative value is in the development stage companies. This is where the fortunes are going to be made over the next 2 to 5 years. The ETFs are great. You know, the ETFs might go up 100 or 150%, as we looked at, but those individual companies are going to be the home runs or the grand slams, to use the baseball analogy. This research service also includes member-only videos, such as what you were watching, but they go out every single week, 50 weeks a year, and they are typically 45 minutes to an hour in length, and we cover not only gold, but silver, the US dollar, the stock market, the rest of the commodity complex. We put everything into perspective, and we also answer member questions in that service, so you can stay up to date and you can submit questions about what is impacting you in the precious metals world. If you would like to speak to me one-on-one, please know that I do voice and email consultations with individuals such as yourself. We speak by phone, we speak by Skype for 30 minutes or an hour. We lay out a strategy, we discuss your specifics, and this comes from someone who is fully independent, who takes no funds or no fees from any of the companies or any of the ETFs that we're profiling here. I work simply to help educate individuals such as yourself from an independent standpoint. So always know you can reach me on the Consultations tab when you are ready to really dial in your own strategy on a professional level. Thank you for watching. Make sure to tune in next week, because this is basically going to be a freebie. We're giving away one of the companies that we are investing in here, and in the interview, you will get to learn a lot of the reasons why. See you next week.